It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, May 16th, 2016. Welcome back to another big week of learning and earning here with us on our nightly newsletter. Tonight we're covering crude, S&P, gold, and the euro. You know you've got, right? You know you got a good video ready for you here tonight. Before we jump into our charts and put together our strategies for tomorrow, I want to remind you the only place to watch the full-length version of this newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel or anywhere else besides the blog, it's not the full-length version. If you want the full-length version, follow the link in the description of the YouTube video and come over here and join me on the blog at Sideways Markets. While you're here, don't forget to grab a free pass. Come out and join me in the trade room as a guest for a few days this week. Grab your free pass in the upper left-hand corner. Right below the video, lower left-hand corner, you'll see a spot to register as a member of our newsletter mailing list. I'll send you an email every evening between 7:15, 7:30 p.m. Eastern Time, letting you know that newsletter is ready to go. And of course, below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Download those below the video on the blog. And don't forget, over on the right-hand side, you can learn everything that it is to be a member here at School of Trade, all about how we trade, why we trade, when we trade. Join the free trial on the right-hand side of the blog. I can promise you this, you'll learn more with me in 1 week on my trial than you will anywhere else on the interwebs. Grab a copy of that free trial on the right-hand side. And remember, we're always here to help you guys 24/7, 365. I know a lot of trading websites, they don't even take your calls. They won't respond to emails unless you're a paid client. I look forward to answering all your questions. Right, hit me up on the live support button over on the right-hand side. We're here in Los Angeles, so we'll be here for a few more hours, even late into the evening Eastern Time. Hope you guys had a great weekend out there. Boy, oh boy, beautiful weather here in Los Angeles. Hope the weather's turning for you wherever you reside around this planet of ours. Back for a busy week, though, ahead of us here. Let's take a look at the schedule for tomorrow, Tuesday, May the 17th. No major news on the calendar here for this evening. We are going to hear from the Royal Bank of Australia later on tonight with their meeting minutes. I doubt that's going to get things shaken up too much here going into tomorrow's session, but just be aware if we do see any shenanigans after 9:30, you know why that's coming out. Tomorrow, though, the big news is coming out of Great Britain. We're going to hear from the consumer prices tomorrow. Everybody's talking about inflation. Everyone's talking about inflation right now. CPI tomorrow morning at 4:30, the producer price index, the consumer prices tomorrow at 4:30 a.m. And then if you're with me tomorrow morning in the U.S. session, we got consumer prices as well at 8:30 a.m. No, we're not going to worry too much about the CAD news at 8:30. We have industrial production here at 9:15 tomorrow, and then it looks like we get some GDP tomorrow night at 7:50. We'll talk more about that in tomorrow night's newsletter. So, couple big reports tomorrow morning, 4:30 a.m. if you're in the London time zone, 8:30 a.m. if you're with me here in the U.S. session tomorrow morning. Don't forget, we open up our trade room tomorrow at 8 a.m. Eastern time. We'll be trading around that news. And then we got 9:15 tomorrow. As you guys probably hear me say this all the time, news is noise. I do not trade the news. In fact, I want to know nothing about the news other than what time it is, and then waiting for the reaction. I trade the reaction to the news. I have no interest in gambling on news events, right? It's an easy way to lose all your money and go home crying. So make sure you pay attention tomorrow morning for those major news events. And remember, if you don't know how to use economic news the safe and reliable way, come out and join me as a student. We'll do it together tomorrow morning, starting off at 8 o'clock Eastern Time. Heads up on the rollover here for crude. We do have a rollover on crude oil coming up here the next few days. The 18th of the month is typically our rollover day. As I'm watching this right now, it looks like tomorrow we will still be on the 616 contract. But heads up, though, most likely Wednesday or Thursday this week, we will be rolling over to that 716 contract. I can't believe we're looking at the month of July 2016 coming right around the corner here. Hope you get your summertime plans made already. It's coming right around the corner. I know I do. So, rollover alert on crude oil to the 716. It's probably not going to be tomorrow. It might not even be Wednesday. It's probably going to be Wednesday or Thursday. We'll keep in touch on that as the week progresses. Crude is bullish here and trying to finish rotation back to the highs of a hidden channel this evening. But price is quite expensive up at the highs, so we can assume the wise bulls will be looking for a trap back at prior support levels. levels or a strong breakout pullback above this 47.85 resistance if they're going to buy this market tomorrow. As you can see, the bulls had complete control all morning with a spike in channel, and after a very shallow pullback off the highs, the buyers were able to retest that double up resistance to finish off the session. Buyers will be looking for a strong move higher to give them confidence that the market is accepting such an expensive price, or they will wait for a cheaper price back at prior support levels below before they want to buy more. Sellers need to be careful right now because we can assume that such a strong push higher today will have swing buyers interested at all the prior swing levels until we can get until basically we can get and stay below that 47.11. Really right now, this is what the S&P looks like, very similar to the S&P, except the S&P hasn't pulled back at all yet. But you can see, though, this is nothing but a bull market right now, and every time this market pulls back to any of these prior swings, boy, I wouldn't think at least until we get back to 47.11, you're going to have swing buyers trying to buy this thing up, right? So I would assume right now, either we need to see a very strong push higher, breakout, pull back, or we're going to have to see this price pull back, trap low. And remember where the sequence goes. As we pull back to areas, in this case, areas of support in a trending market, we're looking for, remember the sequence, seller failure into strength, strength into pullbacks, and pullbacks back up to that high. We'll talk more about that on my trial. We'll do it together, obviously, every day in our trade room alongside all of our members. What I can't give you tomorrow is the exact entry level and entry trigger. What I can do, though, is tell you where the most reliable opportunities are going to be, because that's all we do here as professionals, right? We don't know what the result is going to be for each trade. We just know, what's my trend? Trend is bullish. It's so bullish to the fact that we can assume that long-term swing buyers are going to see this as being a little bit too expensive, and they're going to want to buy at a cheaper price. What cheaper price? It's a little bit difficult to tell exactly what cheaper price, but my assumption would be here, though, that until we can get and stay below that 47.11, and even then, buyers look at this and they go, okay, this is clearly bullish. I want to get in, but I don't want to get in this high. I want to buy right at a pullback as it goes lower. Now, what's the other example? Because we do have a hidden channel here, right? Got a bull spiking channel. This bull spiking channel, it broke, trap low. I mean, just a tiny, tiny little trap here. You can see how shallow that little pullback was. A good example, though, trap low, seller failure, failure into strength, then pullbacks here going up to a new high. As you can see, we've also got a potential bull channel here, kind of a hidden bull channel, and we're trying to go from the low to the high, right, back to the low, up to the high. That's the ultimate target now for those buyers. But again, you have to assume a lot of the bulls right now are going to see this as being too expensive. What are the buyers going to want to see? They're going to want to see this market push higher here, pull back, and if I had it my way, I'd keep above this 47.85, right? See a green candle, hold above 47.85, and that will give them the green light to be a buyer on the way up. So it's either going to be a strong breakout pullback that holds above what is support now, which will be resistance if we do pull back. Keep in mind, that'll be resistance if we pull back below that double up target at 47.85. It's either that or we got to get low so we can buy before we can get back up to those highs. Overhead resistance is the triple measured move, A up to B, B up to C, right? And of course, or I say B back to C, C up to D, and then of course up to that triple measured move. That's up at 48.16. As we go higher here, sellers can look for a double top reversal, right? A double top reversal at that triple measured move. Just remember, though, if you're going to sell into a bull market, make sure your target is much larger than your stop, because it's probably going to be about a 50-50 win ratio trying to sell that double top reversal. It's definitely not the most reliable way to do it. The most reliable way to do it is, if we do go higher here without pulling back, is to wait for it to break lower, hold a pullback, and then once we see it hold that pullback, then you'll know you've got the green light to go higher. But typically, though, what happens is when we hit those measured move areas, we see a double top. That double top is then sold by professionals, and then you see the scalpers come in after the fact and sell it after they get a pullback. We'll talk more about that to our students in our trade room tomorrow morning. Be watching that stuff live in real time. But we do know that most of the time, those bullish markets, they're not gonna turn on a dime. So expect that double top. That'll lead to the double top reversal, and then new lower low, hold the pullback for those sellers if we go higher. I have a very hard time, though, telling you to sell here without price going higher first, because as this price goes lower, it's going to get gobbled up by these buyers. Again, I wouldn't think until we can get and stay below that 47.11 that you're really going to have any open space to play with here, or have any buyers who can't still make money. That's the reality. You have to knock these buyers out. If you want to be a seller in this market right now, you've got to knock these buyers out, and they're not going to get knocked out until this thing literally does not hold and it comes back, stays below that 47.11. So if I have it my way, I'm looking to buy pullbacks at those support areas. Traps lead to strength, right? Or should I say failure to strength, strength to pullbacks, then pullbacks back into those highs. If you're a seller right now, be very, very careful out there, because again, if it goes lower, it's going to get bought up. If it goes higher, that's really where you want to be looking to sell. And again, even then, double top reversal is only about a 50-50 chance. You want to see that double top reversal and then hold that pullback. That's going to be the one that's really going to be the most reliable for those sellers tomorrow, right? So be careful out there if you are a bear on crude oil. Again, don't forget, we'll be trading that market tomorrow morning live in real time with all of our students. Next up here, the E-mini, quite bullish with a spike in channel this evening. This tells us the buyers need to stay patient for the most reliable opportunities back at prior levels of support before we retest the highs again tomorrow. Very classic, just classic spike in channel right now. Buyers are in this, but as you can see right here, the bulls had control for the entire session today. And on the first pullback to the moving average, we see this. We see buyers trying but failing to keep the price moving higher. This is a clear sign the price is considered too expensive for the buyers right now, and they will wait for a trap at prior support levels below. Very similar situation on crude oil that happened earlier today. If you go back on crude, look back on crude, and this is exactly where crude was. Right? Here's your crude chart again. Bulls spike in channel. Right? They pulled back. Look right here. They couldn't hold the pullback. Surprise. Price is too expensive. So what does it do? It traps low and goes back to the high. Right? When we revisited that high on crude oil, that's what we're expecting to happen next on the S&P. Crude's already done it. So now we expect this pretty much the job to be done. We expect the buyers to kind of, wash their hands of this right now and say, okay, come back and give me something more, right? I want to buy it a little bit lower now. It's going to really have to look strong if the buyers want to keep buying this high up. That's why, again, a pullback is more reliable, right, on oil. Now you can see on the S&P, this is just a slightly different look at what is the same situation that crude oil went through at 9 o'clock this morning. So we look at the S&P right now. Again, it's very easy to see. We get a bull spike in channel. Right, there's that spike up, channel up, a little bit ugly, right? We had some major news out of China overnight on Sunday night. I talked about that on Thursday night's newsletter. So hopefully you guys and gals were able to catch some of this move because you were expecting it, because you're diligent watching my newsletter from last week. But the reality is we have a bull spike in channel, right? That bull spike in channel, look closely. This is the first time we've pulled back to the moving average the entire time. Okay, you don't see that very often. Price is very much, I hate to use the word overbought, but it's definitely going to be considered a little bit too expensive. So they pull back, they try to hold it. You can see buyers tried here, but this is clear rejection of that higher price. So what happens when the price is too high? You got to get low before it goes back up, and you got to attract some bulls. How do you attract the bull? The color red, right? Some red candles. I'm trying to find something to keep